All right, so in my last video, I shared with you the four main stocks that I was buying heavily in this bear market. And if you haven't watched that video, to recap, it was Airbnb, Hims, Google, and OpenDoor, okay? But I'll be lying if I said to you that I haven't been a seller, okay? Because I have sold three main positions, okay? One was for a huge profit, okay? And I'm going to share that with you. The other, I sold out completely for a loss, all right? And then the third, I downsized the position, okay? I cut the position in half, also at a loss, okay? Because with that business, this quote by Warren Buffett pretty much has been pivotal, okay, in my reasons for selling the company. And, let's start it off. So Warren Buffett says that time is the friend of the wonderful company and the enemy of the mediocre. Okay, so time is a friend of the wonderful company, enemy of the mediocre. Now, I didn't really understand this quote to begin with, but as I've remained invested in this particular company, I'm going to lead off with that one. I've realized that this company is mediocre. Okay, and one of my mistakes was I was incredibly bullish on the company to get started with. So I'm going to get into that. And before I get into that, I just want to say that this was my investment decision. In my opinion, the fundamentals and the financials of this company began to deteriorate. And it's not something you want to see, especially in the bear market. I want to see my companies, I want to see the financials and the fundamentals improve because, time is the friend. Because even though the stocks are going down, as long as the fundamentals and the financials are doing well, and the price is getting cheaper to own more of these businesses, then that's the best case scenario. So I'll be happy to add. But in this particular company's instance, the fundamentals and the financials became worse. The longer I've held this company, the more I've realized that it's actually a mediocre business. So with that said, let's get into it. So the first company that I sold, and this was a position that I reduced my position in half, I cut it in half. It was Tattooed Chef, okay, TTCF. And as you can see, I notified my Discord on the 2nd of March that I was going to begin selling Tattooed Chef. And you can see the reactions were kind of mixed. I mean, a lot more people were disappointed in my decision to cut my position in half on the 2nd of March. Some agreed, some clapped. But these are my reasons for selling, okay? So as I shared earlier from Warren Buffett, time is the friend of the wonderful company, the enemy of the mediocre. And as time has gone on, indeed, TTCF is continuing to prove itself as a mediocre business, at least from a management standpoint, okay? So blistering execution when they originally went public. Now, I want to make this clear. I invested in Tattooed Chef when it was still a SPAC, okay? So during the FMCI, I believe the merger ticker was, I've been invested in Tattooed Chef since August, September 2020. So way before, Jeremy and everyone else caught on to Tattooed Chef, in the retail scene, I've already been invested in this company, okay? I was invested in Tattooed Chef when their private label sales were still dominating the large part of their revenue, okay? So I've pretty much been invested in this company from the moment that it became available to us, the public, okay? So this was my rationale for selling. They had blistering execution when they originally went public, extremely impressive store expansion. We can't argue that. As soon as the company went public by December 2020, we were already in Target. And then in 2021, we expanded into Kroger. We were in Costco's. We were in Costco's UK. So store expansion was excellent, okay? And execution has been excellent. However, they will be delaying the earnings once again due to substantial growth in annual revenue, okay? Just sounds absolutely ridiculous. And let me show you what I mean. So this was their filing, okay? The company filed on the 1st of March, okay? A notice of late annual filings. Now, you have to remember, this is their Q4 earnings that they notified us that will be late, okay? But this was pretty much back to back because if you recall, 6 months ago, I was in a live stream with Jesse from the Plant Stock channel. Check out Jesse, top quality guy, great channel, great content. Check him out. But you can see me here, right? I was absolutely distraught because Tattooed Chef delayed their Q3 earnings. And we only found out about this delayed or rescheduled earnings literally a couple of minutes before they were meant to post their earnings. So Not only did they delay Q3 earnings, they also delayed Q4 earnings, right? And the rationale or the reason behind that, in my opinion, was pathetic, okay? It was absolutely pathetic. Here they notified us that, yes, they couldn't meet the 60-day filing deadline, and they were unable to finalize its consolidated financial statements within the shortened timeline leading up to the March 1st, 2022 filing deadline, okay? And the reasons for that, they said, yep, revenue was significantly higher as a result of year-over-year growth, operating expenses, blah, 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 blah. They're saying pretty much everything was higher, and as a result, and that is, it's ridiculous, right? And as a result, that's why the filings were late. Now, in my opinion, yes, the operating expenses were higher, revenue was higher, but the losses were also greater. I'm in companies like HIMS, right? I'm in companies like OPENDOOR, which are relatively new companies to the public as well. And they are growing much quicker and much more efficiently than Tattooed Chef is. And they have no problems, okay? They've had no problems with their filings, all right? So I didn't really buy this excuse that Tattooed Chef provided. And in my opinion, the blame lays solely on Stephanie, okay, the chief financial officer. She's been horrible, okay, in my opinion. I'm sorry to say as it is. In my opinion, she has been horrible. And it's also reflecting on Sam, because the fact that she's still in her position, despite back-to-back, delays with earnings, says a lot about Sam, okay? So I said to myself, I can't understand why management are unable to get something as standard as compiling your earnings report on time right, okay? Red flags are starting to show through the cracks, but I still have faith in Sam Galletti. However, the risk is too great and I'm no longer comfortable with my exposure to this business, okay? And the reality is Tattooed Chef was my largest position for the longest time, for a very long period. But with each and every quarter that went past and seeing the performance of the business, I became more and more concerned about my position, okay? So with that said, I have decided I will begin reducing my holding in Tattooed Chef with the goal of cutting my position in half, taking only half my original position into earnings, in brackets, whenever they are released, okay? So in my opinion, I said that management ticked all the right boxes at the start, okay? It was a blistering start, okay? CEO owns a majority stake, demonstrated deep connections that led to huge partnerships with rapid expansion into the largest retailers. Sam has decades of experience within the industry, etc. But as time has gone on, the cracks are beginning to show and I have to reduce my exposure, okay? So let's take a quick look at what I'm talking about here, right? Revenue growth has been okay, right? So 2021 was a bit of a mixed year, We had a really strong Q1. Q2 of 2021 was a bit average. Q3 was quite disappointing with their revenue of only 58 million. And then Q4, again, revenue declined. So it's been up and down. But I mean, if you look at it from a longer term perspective, you can argue, okay, yes, the trend has still been upwards. However, my biggest qualms is the margins, okay? Margins were horrible. Like I mentioned earlier, when I was in Tattooed Chef, I was used to double-digit gross margins, okay? That was what they presented to us investors in their investor relations pack as a SPAC. And the margins have just gotten worse, okay? So Q4, the company had 17% gross margins. Q1, they had 13.6% gross margins, so it starts to decline, okay? Q2, margins increased a little bit to 16.5, but Q3 was really when my doubt and the crack started to show through because, I mean, they delivered gross margins of 9.45%. Remember, this was also a time when they delayed earnings. So not only were earnings delayed, but then margins for the first time dropped to just single digits, all right? And then, of course, in Q4 was atrocious. Gross margins were only 2%. And so this is what Warren Buffett says or means by time is the friend of a wonderful business, enemy of the mediocre. Because as time has gone on, the financials, in my opinion, from a margins perspective, has gotten worse. And, there's no point, right? There's no point sucking up to the business and trying to paint it as the most amazing business when in reality, it's not. It's mediocre at best. And even Q1, so this is by the time I already half my position. Yes, margins improved a bit, but I have no confidence in, them continuing to deliver gross margins that are double digits, all right? I wouldn't be surprised if these margins fell back into single digit territory. And of course, this is having an impact on the net income, and we're starting to see the decline. Net losses are getting greater. So the reality is, right, we should not get married to these businesses, right? As long-term investors, yes, I know our time horizon should be, 5 to 10 to 15 years, but also being a successful investor over the long term requires the skill and the ability to detach yourself from these businesses. So don't get married to these companies, and also admit when you got it wrong, and admit when the fundamentals and the financials begin to deteriorate, and then make a decision to either sell at a loss or reduce your size, or you can continue holding your position with a hope and a prayer and hope things turn around. But in my opinion, hope is not an effective investment strategy. And for that reason, I decided to reduce my position by 50%. Now, take a look at the stock since then, since I sold it. I sold it at the beginning of March. So within this range here, my average in Tattooed Chef was in the high $18. So I began selling Tattooed Chef between $12.50 and $13. Okay, so I realized about a 28% loss on half of my position, because this is when I was selling early March. And since then, not only has the fundamentals and the financials broken down, but also the stock has broken down, and Tattooed Chef is now trading at $6.93. Okay, so yeah, I'm still underwater with half the position that I have remaining in Tattooed Chef. I'll just continue to hold and see the results in Q2. If there's an improvement there, then I'll continue to hold, but best believe I am not buying this dip. Okay, so I'm just going to bundle up the other two positions that I sold. One was AMD. I sold it at $120 for a 64% profit, okay, raising more than £15,000. And then I sold my entire position in Facebook, or Meta, for a 33% loss, or minus £5,000 loss, raising an additional £10,000. Okay, so my rationale or my reasons for selling AMD is here. AMD has been an incredible investment for me, and the company has continued to execute. Okay, but I hardly follow the company closely because, in truth, I don't understand everything about the business on a higher level. Okay, so I would prefer to invest the profits and additional capital raised from the sale into more higher conviction companies that I understand on a much higher level. Okay, so my rationale for investing in AMD in the first place, I bought AMD when it was $75, and I just realized it as a deep value company. Okay, here is a company that was growing at a rapid pace, but the stock was completely disconnected from the company. And that's one of the reasons why I got into AMD. And that's me just being completely honest. Did I understand the business on a higher level? Nope. But thankfully, when I was buying at 75, that was the bottom. And yeah, we made some fantastic profits in AMD, okay? So the other position that I sold, I mentioned, was Facebook. It's taken me a couple of weeks post earnings to reach this conclusion. And frankly, it was a simple one to make, okay? So my whole investment thesis of Facebook, which I shared with my Discord in Emmanuel's research tab, was primarily around the Financial Times report, okay, which falsely claimed that Apple and Facebook had reached a truce regarding the iOS privacy changes in December, okay? That was absolutely false, because we found out in Facebook's Q4 earnings that it just wasn't the case, okay? So once Facebook reported recent earnings, we discover that this has indeed not been the case, and they continue to suffer from the impact of the Apple's iOS changes, okay? And at that time, Google also announced that they were introducing Android restrictions, which will further impact Facebook. So my investment thesis is shattered, okay? So, and I'm not entirely convinced on the metaverse side of the business, and therefore I'll rather sell at a loss to raise capital for higher conviction investments. And again, there was a mixed reaction from my Discord members. Some people didn't like the fact that I sold. Some people thought it was a good decision, but it is what it is, okay? So those are the positions that I have sold. Let me know what you guys think. Did I make a good decision or did I make poor decisions? Comment in the section below. I'm sure, just like in my Discord where I had some people not happy with the decision, and I'm sure on YouTube I'm going to have some people that are not happy with the decision or agree. But ultimately, we've got to protect our capital, and it's our own individual portfolios, it's our own individual journeys, and we've got to make decisions that best suits ourselves and our portfolios. So with that said, thanks so much for watching, and I'll catch you in the next one. Peace.